There are a lot of things happening in the stock market right now, but let me narrow it down to the top 3 things to note based off of our weekly market letter, which you can read for free at MarketEdge.com. Let's get into it. Number one, most important thing to note going into this trading week is definitely our market posture and CTI change. We are now entering a bearish cycle, and really quick, our market posture is our intermediate term forecast for the entire stock market. We use cyclical analysis and multiple technical indicators, both traditional and proprietary, to produce this forecast. So we are now in a bearish territory. And if you'd like to see how long that this bearish cycle is projected to last, definitely check out the weekly market letter at MarketEdge.com to learn more. I'll keep it short and sweet here. So let's jump into number 2. Second thing to note is the stock market is considered oversold by multiple technical indicators. If you'd like to see what those indicators are, you can learn more at MarketEdge.com. But if you're not familiar what it means for the stock market to be oversold, well, essentially, market technicians track average volume going in and out of stocks over time. So you'll see a trend line, and every now and then you'll see movements above the trend line, which means that the stock market is overbought. And you'll see dips below that trend line indicating that the stock market is oversold. And at some point, things will sort of bottom out and you'll start to see a little bit of a rise back up at or near the trend line, which brings the third thing to note. Third and final thing to note is where can traders find support? And when I say support, I don't mean stock market traders anonymous support groups. I mean support levels based off of technical analysis, which are levels at which the stock market could find a bottom before it starts to rise back upwards. So let's take a look here. Dow Jones would be looking at its 38.2% retracement level, which would be 34,040 to 34,120 area. For the S&P 500, that would be the 4,300 to 4,320 area. And for the NASDAQ, we're looking at the 50% retracement level, which would be the 100-day moving average level, which would be 12,827. Those are support levels that traders are keeping an eye on. However, if the stock market actually breaks through those levels of support, then there are even lower levels of support, which would be the next line of defense. Those are all things that we monitor at MarketEdge.com so that you don't have to. But if you would like to stay on top of things, you can go ahead and create a free 2-week trial at MarketEdge.com. Hopefully some of this content was useful for you. If so, please give us a subscribe so that we can continue making useful content. And for now, thank you for watching and happy trading.